Halo, selamat malam semuanya. Malam ini kita akan membahas tentang apa sih yang perlu kita lakukan di saat masa-masa ini untuk kita berinvestasi. Yuk, simak ulasannya bersama Jason Mariposa. Jason, this is time and it's just for you. Hai, bro.
Okay. Hi guys. Hi. So I'm sure you guys have seen the crazy action in the markets, right? And in fact, I think around 2 months ago, right, we asked you guys to top slice our positions and have at least 30% cash in your portfolio, right? Because I think
Yes.
we're seeing crazy amount of volatility, crazy amount of uncertainty outside, and yeah, so I think that's going to be our main topic for today. Okay. And I don't think you guys should be scared. I think you guys should be excited, actually. I mean, without all this uncertainty, there's going to be no buying opportunities, right? So if you ask me personally, I want uncertainty, because it creates a lot of very cheap stocks, if you ask me. Okay. So I guess we have to start this with the global markets. Yeah, I think at least for the next 6 to 12 months, what happens to Indonesia depends on what happens outside, especially in the US market. So that's why in this first part, we're going to focus on what could happen, what are different scenarios that can happen in the US market. Okay. So I think to summarize this part, US market this year, actually not just the US market, but a lot of markets around the globe have entered bear market territory. What's a bear market means 20% or more decline from the peak, right? So as we all know, inflation is accelerating this time. And so even though the market fell down so much already, the Fed is still hiking interest rates, okay? And I think what may happen today is that, our recession may be the only way to cool down inflation. But of course, I mean, anytime the economy slows down a lot, of course, that creates a lot of uncertainty. Okay. I guess before we, dive down and break down everything I said here, I think we have to take into context what happened in the US, like in the past 10 years. So if you look at it, this is the US market. I mean, I'm sure it's been in a crazy bull market actually for the past 10 years, right? So this is the past 10 years. US market just keeps on going up. And you may see that every time there's a big dip in the market, the liquidity, this is the total liquidity in the market. So anytime central banks start to print money again to support the market, this blue line goes up. Okay, so as you can see, starting 2008 in the crisis back then, every time the market goes down, the central banks print a lot of money to support the market. Okay, so it happened 2008. It happened in the big pullback here. Look what happened to liquidity, went up again, right? 2015, there was a fear of China hard landing, creating a crisis, China slowing down. Look what happened to liquidity, right? And I think we all know, like, for example, in 2020, right? Look at this. Gigantic amount of money printing happened. And look what happened to the market, right? It's created basically the biggest buying opportunity of a lifetime. Look at that. The fastest bear market and the fastest bull market. Okay. So I think you get the point, right? That, the past 10 years, the markets, especially the US market and investors in the US, expect the Fed to do something every time the market falls, right? So I think that creates a dangerous situation, which is really why it's creating a big bear market outside. Okay, so the winner in the past decade, 2009 to 2021, is really US market, especially the technology stocks. So if you look at this, look at that. Between 2009 to 2021, every single year, the NASDAQ was green, right? the total return during this period was 1,538%. Okay. Crazy, right? So while during this time, emerging markets, commodities, old economy stocks, like for example, banks were just going sideways, all the money was flowing to the US market, into this gigantic bull market in the US, which I think obviously is under threat this year, right? Okay, so this giant bull market in the US culminated in what I call a speculative mania in 2021. Okay, where some stocks in the US were really, how would I say this? There were a lot of stocks in the US where it reached like dot-com bubble level valuations, meaning there was just really crazy speculation that happened in the US market, which peaked in 2021. Okay, so like for example, if you look at this Nikola, the EV company, the market cap of the peak was at 34 billion. Today it's down 90%, right? And this ARK ETF by Cathie Woods, ARK, ARKK, which is composed of very young cash burning technology companies. Look at that, surged almost 400% during the pandemic, but now it's gave back all its gains. Okay, so I think establishing this context, where the U.S. market is really coming from a very long bull market that may be ending. I think it's very important to understand, why I think today there's a major uncertainty outside, especially in the U.S. market. Okay, so this is a nice quote, that's every time there's a very long bull market, people take a lot of risk. And then that makes the economy, that makes the market sensitive to even modest shocks. Okay, and this is from Mark Faber, who says that, okay, booms, mania, speculative excess occur in the final upswing of a business or investment cycle. The longer a market has been an uptrend, the more likely a mania will follow, as the rising price trend becomes perceived to be permanent. Okay, so this boom, this long period of bull market that makes the economy, makes the market sensitive to even small shocks. Okay, I think that's what's happening to the end-use market. Okay, and unfortunately, we don't just have a smaller shock. I think we have a giant shock in the markets right now, right? So this is, as we all know, right? Inflation is exploding everywhere, right? And I think that is the big shock, that could end the very long bull market in the US. Okay, so what he's saying is that this is Bridgewater. I'm sure you guys know Ray Dalio, right? Is the biggest, and Bridgewater is the biggest hedge fund in the world, right? So I think he's saying that we're in a radically different world. Inflation is very high, and he thinks that it could take a long time, before it goes down, right? And he's saying here, if the Fed were committed to bringing down inflation to its 2% target, from today it's around 8%, right? Then they could tighten monetary policy in a very strong way, which would damage the economy, and of course, crack the stock market as well, right? And that's what we're afraid of right now. I think that's the major source of uncertainty, whether, inflation, have we seen the peak? How long is it going to go back to the 2% target, or if ever it's going to go back? What's the Fed going to do, right? And all of those things. I think those are the, major sources of uncertainty right now, okay? So I think if there's just one picture that captures the situation, I think it's this, this is the US 10-year bond yield, right? So you guys know that if bond yields go up, right, the bond price goes down, right? And I think this year we have had a record, record sell-off in government bonds everywhere, right? Means that yields are exploding higher. Okay, so this is, it's a huge spike this year, and this is the highest since 2018. And if you look at this very long-term, chart, it seems like something is changing, obviously, right? And I'm not surprised this is happening. If you guys follow markets long enough, you're gonna see that after some time, things change. Things change after some time, and a lot of things are like cyclical, right? Like, for example, I think one such change right now is that we have a very long period of no inflation, and now it's coming back, right? And consider that also we have a very long period since 1990. China opened up, right? There was globalization. Everyone is connected. Like, for example, if you're a US company, you wanted to produce in the cheapest location, which was China. So everyone's getting connected. But today, I mean, the opposite is happening, right? So in 2018, remember that, Trump started the US-China trade war, right? And then we had COVID. So it became very hard to, supply chains got frozen because of COVID. And now we have war, so it's like, these are the things that change after a long period of time, and in market, there's actually a lot of cycles like this. Okay, so I think today, when you look at inflation, what's making it go up today is like huge forces. You have deglobalization, you have COVID-19, you have war, okay, you have underinvestment in energy production, right? Energy crisis. And like, for example, in the US, you have a tight labor market already. Okay, and then like today, especially after COVID, right? Governments resorted to do a lot of fiscal stimulus, like, free money, right? Stimulus. Okay, so, okay, maybe we can, okay, let's skip this part. You guys can just read this when I send a PowerPoint, but I guess, I think the main point of the article is that, the government is basically having to choose whether you want inflation, right, or a recession. Okay, because as mentioned, like most of the inflation today is coming from a lack of supply, right? So the only way to stop inflation is via a recession. Okay, so the Fed raises rates, demand slows down, and then we get a recession around the globe. Okay, which of course is again also another source of uncertainty, right? And yeah, I think the biggest risk today is that of the Fed cannot just print money out of thin air right now. Why? Because inflation is very high, right? So if the Fed prints money, inflation gets a lot higher, right? And then the Fed may have to raise rates more aggressively down the road, right? So today, I think if the Fed is successful in making inflation go down, what's going to happen is a recession, and of course that will again, I think, cause a lot of uncertainty. Okay, I guess a lot of economics part here. Okay, so I have a video here just maybe to summarize in 1 minute, what's basically happening in the markets today. Okay, so maybe you can watch this just for 1 minute. Oops, sorry. Okay, I hope you guys get my point, right? As to what's happening in the US market. Okay, so yeah, I think you guys get the point, right? That US is coming from a crazy bull market, and that the bull market may have met its match, inflation exploding, meaning the Fed has to hike rates, and like if we look at where inflation is coming from, it's from the supply side, right? Meaning for inflation to slow down, demand really has to go down, and that could cause a recession. I think not just in the US market, but globally. Okay. And I guess just going back to how all this started is actually from the pandemic, right? So I think I showed this to you guys, right? That, during the pandemic, the Fed created a crazy amount of money, printed money, 4 trillion, 5 trillion of fiscal stimulus. Okay. And I think that, created a gigantic, demand, it's really, that's one reason why inflation is so high, right? And like today, it's not just demand, but supply is also in trouble, I think, I've talked about this a long time, right? That, because we have a lack of investment in energy, especially the fossil fuels, right? And, that's creating a spike in fossil fuel prices and electricity prices and, just about everything. Okay, and this is what I'm talking about a while ago, right? Deglobalization. Because of COVID, because of the trade wars, because of the war with Russia, people are starting to localize their supply chain. Instead of having a supply chain all around the world, people are, localizing supply chains. And of course, that will become a lot more expensive, and that will make prices, of course, go up. Okay, so this is inflation globally, right? US 8.6%, right? Eurozone 8.1%. UK, I think it's around 9%. Food price inflation around 15%. Okay, so as you can see here, select categories of CPI, of course, fuel, gas, airfare, natural gas, of course, those have gotten the biggest increase, right? And I think that, a lot of people are talking about, okay, we're probably close to the peak inflation, right? And maybe, okay, but I think that, if this is, for example, this is the target of central banks, 2%, for example, and today it's 8%, right? It may peak already, right? Pretty sure, maybe, but I think it's going to take a long time before it gets down to 2%, And if it takes a long time, then of course, the Fed will have to raise rates, right? Continue to raise rates or keep rates at very high levels, right? Which of course is can create a slowdown. Okay. So, I think that because, like, for example, in 2021, actually, not a lot of people were expecting inflation, and including the market, actually. And so if you look at the bond market globally, I think we have a record sell-off this year, right? And bond yields spiking around the globe, right? So this is the year-to-date change in the bond yields. Okay, so these are gigantic increases, meaning the bond prices of all these countries went down a lot. Okay, and if you like look at the size of these markets, actually, guys, do you guys know that the bond markets globally is a lot bigger than the stock market? Okay, so this means that I think people are losing a gigantic amounts of money. Okay, and here, if you look at the US market, I think it's already down, I think around 24% year to date. Okay, the median bear market is actually around 24% and lasts for 7 months. Okay, and actually we're already quite there. Okay. Okay, so maybe we could be near the bottom. Okay, but I think the major question is really still, again, on the inflation, on Fed, on whether we get a recession or not, or how deep, right? I think those are still major questions that have to be answered. Okay, and also, like, if you look at the US market, it's down 20+% year to date, but actually, so if you look at the NASDAQ here, NASDAQ and the S&P 500, these are the main US indices. Actually, they're just back to where they started in 2021. Believe it or not. I mean, they just gave back the 2021 gains, right? And this I showed a while ago, right? Still a crazy increase in the past 10 years, right? Okay, and I think I've mentioned this a while ago, right? I think the major difference today, right, that's not the same in the past 10 years, is that in the past 10 years, every time the market fell a lot, the Fed would come back and print more money to support the market. Okay, today, it's different, right? We've never had, in a long time, the Fed hiking rates in an official bear market already, meaning the market's already down 25%, but the Fed is still hiking rates, right? And I think that could create a lot of uncertainty. Okay, so I guess just an update. Last June, right? The Fed hiked rates 75 basis points, and today the Fed funds rate is around 1.875%. Okay. So I think this is still quite low, actually, but consider this is actually still quite low, but consider that just February 2022. So that was around maybe like 4 months ago, right? The Fed funds rate was at 0%, right? So 4 months later, it's 1.875. And 1 year later, this is the forecast of the market where the Fed funds rate is going to hit around 4%. Okay, so all of that is in a matter of 1 year, guys, which is actually a very sharp change in the rates, And markets are all about rate of change. When something changes very drastically, right? Like, for example, oil, right? If oil goes from like 30 1 year to 100 the next, I'm pretty sure someone's going to be hit, right? Someone's going to be affected. I mean, if you're a business, like you might even go out of business, right? And close down, right? And this is something you guys have to know about the markets, that it's all about rate of change, right? Yes, going back to my oil analogy, right? If oil went from 30 to 100 in 10 years, I mean, that would be nothing, right? Nothing. I mean, the entire system, like you, for example, as a business owner, you would be able to adjust, right? So, but if that's 30 to 100 oil in 1 year, oh my, right? You might go out of business, right? So I think it's the same thing. It's exactly the same thing, with hiking interest rates. If it's very aggressive, very fast, that could be a wrecking ball to the economy and to the stock market. Okay, and I guess this is, I think you guys might sell. The next thing you guys might tell me, like, Jason, I think everyone is bearish already. Yeah, I agree. You know, if you look at the news, right, everybody's saying, okay, inflation, recession, bear market, you know, and I agree. I agree. Right. We might even get an oversold bounce in the next few months. Right. But I think that big picture, I really don't think we're in the, I don't think this is over yet, you know. And I think while US market's already down like 24%, you know, I think if things deteriorate even more, especially if we get a recession, you know, depending on how severe it is, actually we could see a big slowdown in earnings, right? I mean, that's only logical, right? That's, you know, if the economy is slowing down, and of course, corporate earnings will also go down, right? But look at this. So this is the estimates of analysts, right? So where's the recession here, right? Right? The market consensus estimates, meaning the average of all the analysts out there, still expect earnings to grow in the next 3 years. You know, and that's despite everything that's happening today. Okay, and I think this is even more important. Look at this. Net profit margin is still expected to go up. Okay, which to me doesn't really make sense, you know, because the cost of everything is already exploding higher, right? So this tells me that maybe the market's not bearish enough, you know. Okay, so this is what I'm talking about. That okay, so if you look at the past 60, 70 years, right? So this is the gray area is the recession, you know. So when there's a recession, earnings typically fall 20 to 50%, right? So let's say somewhere around 20%, okay, just to be conservative. Okay, so this is what people expect today. Okay, so people expect the earnings to just continue to chug higher despite everything that's happening. Okay, so that's why I think that, you know, maybe the market can still go down some more, you know. And I guess another thing you have to look out for is, of course, I think the most basic valuation metric is just PE, right? So this is the US market. Okay, so I think that's, you know, if the average here is 16.8, right? And now we're just only at 16, right? Which is really just very close to the average, right? Meaning valuations are either expensive, not expensive, but not very cheap also, just in the middle. Okay. And I guess the important part here is that, you know, every time something big happens in the market, like for example, okay, where did my label go here? Like the global financial crisis, 2008, right? Here, 2011, right? Where I think this was the European sovereign debt crisis, and also fears that the Fed was not doing enough, right? China hard landing fears. You know, here, the Fed hike rates aggressively here, 2018. And of course, we have COVID-19. Okay, this is all a lot lower than 16 actually. So I guess what I'm trying to say is that, you know, if we look at the most basic metrics, like what people expect for earnings, the valuation of the markets, you know, I don't think we're at the extremes yet. Although we could get an oversold bounce, what I'm saying is that I don't think we've seen the major bear market low yet in the US. Okay, and I guess just to make it simple, before we head on to the Indonesian market, right? So this is what I expect. Okay, so I think that US definitely is already in a bear cycle, right? Bear cycle. So I showed a while ago, right? 10 years of a huge bull market in the US. And 2022, I think we're right here. Okay, so as I said a while ago, I think that, you know, after going down 25%, we could see a rally for sure. But yeah, I don't think we've seen the ultimate low yet in the markets. Okay, so yeah, I think that's, you know, US market's definitely at the top of the cycle, perhaps headed to a bear market, but actually Indonesia's actually right here. You know, I mean, I'm sure you guys know, right, that Indonesian markets have actually just mostly been sideways in the past 10 years, right, and also in the past 3 years, right? So it's not in an overheated, crazy bull market like the US, right? However, what I'm seeing is that, and we have to be very careful about this, is that if something happens in US market, for sure, like for example 2008, right, there could be some contagion, right? I guess those who are not familiar, right, in 2008, right, it was a subprime mortgage crisis in the US, right, where the US market fell 50%, right? There was nothing wrong with the Philippines, Indonesia, right? But actually, if you look at the stock market of Indonesia, Philippines, they fell more than the US, right? So that's called contagion, right? Contagion. Okay, so yeah, as I mentioned, I think a lot of bearish stuff can happen, but at the end of the day, I think nothing is sure, right? It really depends also on the Fed. Okay, I think that what could happen at the end of the day is that the Fed just gives up on its 2% inflation target, right? Right. So inflation today, a while ago, is around 8%, right? The target of the Fed is to make it go down to 2%, right? But I think if they try and make this go down to 2%, that could lead to a crazy bear market, crazy recession, very deep recession. Okay, so actually my base case is that eventually the Fed just gives up and says that, okay, I don't want to raise rates anymore. Okay, inflation, it's okay to be high. Okay, maybe around 3 to 4% is okay. Okay, then of course the bear market could end, right? Right. So I mean, what I'm saying here really is that I think there's nobody knows. I don't know if we're gonna have a recession, how deep, right? It all depends on the Fed, but I guess the one word that can characterize the markets right now is that really uncertainty, right? Uncertainty, very big amount of uncertainty. And like as I mentioned a while ago, I like that because uncertainty creates a lot of buying opportunities, right? Okay, so I guess just going to Indonesia. Okay, actually the Indonesian market has actually been a lot stronger than its peers, right? Although it's also been going down recently. I think it's because Indonesia, of course, is benefiting from the high commodity prices. Okay, and I think just a key risk is that I think the Bank Indonesia, I think should be more aggressive in raising interest rates, right? Given that the rupee has seen a big amount of weakening recently, right? So okay, let's talk about let's dive deeper. Okay, so this is the market right now. Okay, I think we're going into another sideways phase, right? So if you look at this, after the pandemic low, the market rallied so much, right? Then we had almost 1 year of sideways movement. Okay, now rally. Okay, now I think that, okay, this is chart based on last week, but markets right here or right now, right? So I think it's just going sideways if you ask me. Okay, that's my base case. Okay, but if we see a lot more uncertainty, then actually I wouldn't be surprised if the market can go even lower. Okay, actually my estimate is somewhere, a no-brainer price to buy for me is somewhere around here, 5 to 6,000. Okay, so I think if the market reaches there, to me it's no-brainer already to be aggressive and starting to buy. Sorry. Okay, so this is global markets. So as you can see, so this is from based on last week's data, right? The weakest Of course, Russian market down 37%, right? And next is the US and European markets. Okay. And actually, if you look at this, Indonesia is actually the strongest year to date. Okay? Although this is based on last week's data, but still, I think Indonesian market is just flat year to date, right? And actually, like this is Indonesia, and this is the Philippines. This is emerging markets. Right? So as you can see, it's stronger. Okay, although of course, now everything is just going down right now. Okay, and also like I mean, as I mentioned a while ago, right? If you look at the past 10 years, Indonesian market and other Asian markets have actually been mostly flat, right? So actually, we're really at the bottom of a long bear market, if you ask me. Okay, we're at the bottom of a long bear market, and she really is the complete opposite of what happened in the US, which is actually a long bull market that looks like it's ending already. Okay, so actually, hopefully, what I'm seeing is that in the next 10 years, the bull market could shift to emerging markets, actually. Okay. Because as I mentioned a while ago, you know, if you look at the markets long enough, everything is just a cycle, right? Okay. Okay, so this is the foreign flows year to date. Okay, so actually Indonesia has seen a big increase. Okay, but actually this can also be a source of contagion, right? Because if the bear market in the US gets even more severe, you know, I could see foreigners, you know, selling everything, right? And Indonesia could be part of the selling, right? Okay, so if we look at this, this is one indicator I use, right? This is the percent of stocks above their 200-day moving average. Okay, so this shows you that even though the Indonesian market has been going up, actually it's only been a few stocks going up. Okay, and I'm sure you guys all know that, right? So these are mostly commodity stocks have been going up in Indonesia, while everything else have actually been just mostly mixed. Okay, so this is what I mean, right? So if you look at the Indonesian market, you know, if you erase the energy sector, which of course is benefiting from the energy crisis, okay, it's been mostly, you know, mixed action, some green, some red, right? So actually, I mean, most of Indonesia is still, you know, in a bear market and trying to recover, you know, from the pandemic. Okay, so okay, this is another, you know, just breaking down the market action. So as you can see, you know, these are the stocks, the few stocks that have driven the market higher this year. Okay, so these are only 1, 2, 3, 4, 5 few stocks, right? Okay, so yeah, most of the action has really been in the commodity stocks, right? So this is the market. This is the market for the past 2 years, right? So these are all your coal, PTBA, and your nickel mining, Inco, Adaro, right? And Anika Tambang, right? ITMG. Okay. So I guess what I've been saying is that, you know, at least it hasn't really been a bull market in Indonesia, you know, for the past few years and for the past many years, actually. Like even in the recent increase of the market, actually, there's only been a few stocks, right? Mostly your energy and maybe your banks, right? Mostly your commodity stocks also, right? And so really, you know, Indonesia has been in a long Indonesia, Philippines, has been a long bear market actually, and still is in the recovering phase, right? After the pandemic, right? Although, I mean, with what's happening globally, that recovery could be delayed. Okay, the US dollar has been going up severely, right? So if you look at this, this is every single major currency, I think almost everyone is down against the US dollar, right? Although the rupiah has been actually just one of the strongest. I think it's year to date, it's only down 4%. Okay. And like if you look at the markets long enough, right? Every time the US dollar is strengthening very aggressively, actually that leads to a slowdown everywhere. Okay. And I guess another variable that I'm looking at. So this is the Indonesian 10-year bond yield. Okay. So as you can see, it's already also had a big spike recently, around 7.4%, right? Okay. So of course, every time the 10-year bond yield goes up, right, it attracts money from the stock market, right? Because like people say that, okay, when I invest in bonds before, they only get 6% yield, right? Now it's 7.4%, right? So actually that usually creates capital outflows from the stock market. Okay. Okay. Sorry. Okay. I think another thing that I see, when you look at Bank Indonesia, right? Bank Indonesia is actually has been very relaxed in hiking interest rates, right? So as you can see here, Indonesia Central Bank does not need to rush raising interest rates unless it sees fundamental inflationary pressures. Okay, so this is the Bank Indonesia policy rate. It's still at near the all-time lows, right? This is inflation. It's already going up, actually. It's around 3.5%. But actually still very low, actually. I mean, it's still within the BI, Bank Indonesia target. Okay. Although what I'm seeing is that, the Fed is hiking interest rates aggressively, right? Fed is hiking aggressively, but Bank Indonesia seems like very relaxed. Okay. So actually what I'm seeing here is that, that could lead to a lot of capital outflows, because if the Fed hikes very aggressively, while Bank Indonesia doesn't hike, money could go out. Okay, and I think this is one of the reasons why the rupiah is also weakening. Okay, so this is what I mean, right? So this was the Fed funds rates at the beginning of the year, 0.25. Okay, the Fed has already hiked rates by 1.5%. And this is the planned rate hikes for the rest of the year, right? So while this is what the Bank Indonesia plans, right? So this is a lot higher than the rate hikes that the Bank Indonesia is planning. And yeah, that could lead to a weaker currency, and that could lead to capital outflows, right, in Indonesian stocks and bonds. So I think, if ever we see a lot more weakness in the rupiah, I'm pretty sure that the Bank Indonesia will be forced to hike rates more aggressively. Okay, and I guess, just to summarize the macro picture, okay, we have a weakening rupiah, strong dollar environment, right? Oil is going a lot higher, up by 45%. 10-year bond yields, which is actually a proxy for borrowing cost, right, has risen by 18% this year. Okay, so actually, historically, if you look at this every time there's a big increase in, the 10-year, right? Oil is going up, US dollar is going up. Usually the stock market has a hard time performing. Okay, so if you look at also in 2015, right? Strong dollar environment, right? 10-year rising, although oil prices were down. Okay, it also resulted in a weak stock market, right? Okay, so of course, if you look at stocks, especially Indonesian stocks, right? They want a weak dollar, right? Oil prices, it's okay if it's going up as long as not too fast, actually. And they want a low 10-year government bond yield, okay? And so far, all three are actually going against the Indonesian market, okay? Although not so aggressively yet. I mean, like if you look at the Philippines, actually the 10-year bond yield of the Philippines, I think it's up 50% this year, right? Okay. Yeah, I hope I, explained it enough I hope I didn't bore you guys with too much details, okay? But I guess just to summarize what we're seeing, Indonesia is actually a lot stronger. Okay, I think fundamentally a lot stronger, right? And I think it's showing, right? Indonesia is actually the strongest in ASEAN, right? But I think we're seeing a lot of storm clouds out there, especially in global markets. I think there's a high amount of uncertainty. That's why we're recommending, at least for now, to have at least a 30% cash in your portfolio, right? And I think that's the no-brainer level in the markets is if it reaches this area of around 5,400 to 6,000, to me, is really no-brainer to start shopping already for stocks, right? Okay, so I guess this is a nice quote, actually, which we've been using in a long time. Okay, market crashes are actually needed to have higher returns. I mean, just think about it, right? I mean, if the market never goes down, right, how do we buy cheap, right? So actually, this is what we need, right, to generate higher returns over a long period of time. Okay, and I guess just to prepare you guys as to, if ever something happens. Okay, so this is the past, 15 years. Okay, I'm sorry that it's a bit blurry, but historically the declines in the Indonesian market have been somewhere around the major declines have been somewhere around the 25%. Okay, so in the COVID market, COVID dropped 2020. This was a 37% drop, right? In 2008, subprime mortgage crisis, 50%. Okay, but mostly around here, 2011 to 2015, it's been somewhere around 25%. Okay, so if the markets goes to around 5,400 to 6,000, actually that would be around 20% drop from the peak. Okay, I guess some fundamental metrics, of Indonesia still at the middle part of the valuation, right? So it's not expensive like here or here. It's not expensive, but it's also not in the very cheap territory, which is around here, 14.4 times PE. So as you can see here, in times of big uncertainty, the market tends to go to this level. So if it goes to this level, I think it would be near the very cheap territory already. Okay, and that, to me, I think that's around, as I mentioned a while ago, 5,400 to 5,600 to 6,000. I guess analyzing the earnings of Indonesia, earnings per share, actually it's not very aggressive. So as I mentioned, if you look at this, the estimate for this year is just going back to this pre-pandemic level. Okay, it's not like the US where it's already, this is the pre-pandemic level, this is the pandemic. US earnings already up here. which is around 40% already from the pre-pandemic levels. Okay, so if you look at Indonesia, people are only expecting the earnings to go back to its pre-pandemic levels. Okay, so that's why I think, even though if there's a big shock, a big slowdown, I don't think the earnings are going to be affected so much, because in the first place, I mean, they never really went up that much in the first place, right? Just back to the pre-pandemic levels. Okay, I guess, however, if this inflation problem gets a lot worse, then we could see the margins of companies get affected, right? And maybe we could see somewhere around the 10 to 15% decline, which is also not that big, actually. Okay, so I guess just remember, guys, that I just recycle this slide. That actually, if you look at the bear markets, they actually generate the biggest returns, right? Especially for investors, right? So this is 2020. So these are some of our picks, right? So 2020, right? Start of 2020 to March low. This is what happened, right? Huge decline in everything, which created a big, gigantic buying opportunity, right? So if you look at what happened to the March low to end of 2020, of course, we had a gigantic returns, right? If you timed it perfectly, but if we just did a basic cost averaging in a bear market, okay, you would come out way ahead, right? So yeah, I think that, even though maybe this time it takes longer to recover, because as I mentioned, it depends when the Fed will start to do a 180 and stop raising rates, right? So I don't know when that's going to happen. Hopefully, maybe in 1 year. Okay, so maybe it could take a long time, but I guess it's the same concept, right? I think bear market is the investor's best friend, right? Okay, so I guess our focus picks, I just added one more bank, BBCA. So now we added BMRI. Okay, I'll explain later. And we also added ICBP. Okay, I'm gonna explain later also. Okay. Okay, and these are other picks. I think a lot of them also are in the green already, fallen down enough. Okay, so if you have some extra cash, you can buy, but remember is keep at least a 30% cash in the portfolio so that we can take advantage of all the uncertainty out there. Right, so I guess just skip this part and let me just explain the major changes. Let's go back to this later. Okay, so yeah, on strategy, 2 months ago, we asked you guys to top slice and raise at least 30% cash, right? That's when we were seeing the major uncertainty happening in the global markets, okay? So I think we reiterating that call, right? 30% cash level, as I don't think that, all the uncertainty have played out yet. Market, I think, can fall down some more. As I mentioned a while ago, I think the no-brainer price for the market is around 5,400 to 6,000. And yeah, we're not there yet. Okay. There's a lot of things here. I guess just summarize, on the priority list. I think banks are poised to grow already. A lot of liquidity in their balance sheets, right? All the bad loans from the pandemic are gone already. And margins should increase, right? Because the 10-year rates are going up, right? In the food, right? I think the margin squeeze is not so bad. Okay, these of course, in the food is a big company, very dominant, right? They've been raising prices already, and at least wheat prices and CPO prices have started to pull back also, right? ASA. Oh, I'm maintaining this in our list. Okay, comments. Of course, I know it's down 50% from the peak, right? But I think that, when you're investing in a small company, so of course, ASA is a small cap, right? And it's a very young company, right? So I think that in negative market sentiment, just not just today, they can fall down a lot. Okay, so this is actually very typical of young companies. Okay, and this is why I just ask you guys to budget a small amount to invest in ASA. Okay, but I think if we look at the operating trends, they're still growing very fast. It's still a very young company, can still grow a lot bigger. So yeah, I don't really see a big problem for ASA. It's just really, I think, a really bad market environments. From ACES and Wood, yeah, we changed them for now from continue buying to hold. Okay, I have a lot of text here, but I guess to summarize, Wood, I think 94% of the sales of Wood comes from the US, right? And I'm seeing a big slowdown in the US housing market, which could also impact Wood. Okay, so for now, let's put it on hold, right? But yeah. Ace Hardware. Okay, so it seems that, another issue plaguing Aces is that there's a lot of competition happening from Mr. DIY, already have 300 stores, and there's a lot of small stores in e-commerce sites that's actually competing with Aces on pricing. Okay, so that's why I think it's already very cheap, but I think we have to study this a little bit more, if the investment thesis is still intact. So that's why for now, we're putting it on hold first. Okay, wait, sorry. Next stock, I think MAPI, I upgraded a little bit. I think it's proven to be the best reopening play. I think great earnings in the first quarter, and most of its customers are middle to upper class segment, which is, I think, more resilient to inflation. And I really think that the reopening play is still in play. Revenge spending, all of those things. Okay, so that's why I think there's a little bit more space to upgrade this stock. Okay, so I guess just going back. Okay, so this is comparing our picks so far, comparing our picks versus the market for the past 1 year, 2 years. So you can see, I think we have a lot of good picks, but of course, a lot of losers as well. Okay, as I mentioned, I think the environment hasn't been that good yet. I think we're still, in the bottoming part of the economy, hopefully heading to a recovery. Hopefully we just saw a delay because what's happening globally. And I really think that the recovery, the bull market, Indonesia is still ahead of us. And if that view is correct, then of course, I think we're going to see a lot more green in this, in our picks, right? Okay, so yeah, that's it. I think I've been talking too much. Anyway, so I guess just to summarize what we talked about, I think the big bull market in the US is already ending. There's a big shock that happened this year, which is of course accelerating inflation and very aggressive central banks, right? And it's already caused a bear market in global markets. Okay, and I think that the major difference today is that despite the big declines in asset prices, stocks, bonds, everything, the Fed is still hiking rates. Okay, and if a big if, of course, the Fed continues on this aggressive rate hike path, then it could be a major source of uncertainty. Right, it could cause a big recession, could cause even stocks to go down some more, right? And that's why we're still very careful at this point. Okay, so I think most of the inflation is coming from the supply side, which of course the central banks cannot fix, right? What they can do, right, is rate hike, which could cause a slowdown, which could, cool down inflation. And as I mentioned a while ago, of course, this could be another source of uncertainty because every time there's a recession, of course, earnings can go down a lot, right? And I don't think, and like if you look at expectations, I think they're still quite high, right? Okay, so Indonesia has been outperforming, right? Because it's been benefiting from high commodity prices. Okay, but I think, of course, downside risks are present, especially the contagion factor from out there, right? Okay, so I guess as final point, I think that there's a lot of uncertainty out there, and I think we haven't seen the most pessimistic yet from the markets. I don't think we're at an extreme yet. I think a lot of uncertainty, and if what we fear plays out, it can go down some more. So that's why we're continuing to maintain this 30% cash balance. I think no-brainer price is somewhere around 5,400 to 6,000, and I guess just to finish, market crashes are needed for higher returns, right? Remember that anytime there's uncertainty, right, it can create very cheap stocks, which and as an investor, of course, right, that's your best friend. Okay, thank you guys. We just not used to talking a lot. That's why I always drink a lot of water. I guess it's work from home. You're always alone, right?
Yeah.
Okay, a lot of nice questions here. And yeah, I hope you guys like my YouTube video. It's sometimes a lot easier just to show a video, just like in class, right? When you're teaching. I guess from Joko, looking at the global condition, which is not in a good, what action need to be done? I guess his first question. So I guess, I think when conditions are not good, actually that's the best time for an investor, right? So I think you should be looking to buy. It's just that I think that if you guys, I think we can wait some more. I mean, you don't have to be in a hurry. So that's why we're waiting for this uncertainty to play out, right? Because it could create some very juicy bargains, right? So I think the action you should be doing, is just getting your cash ready, making sure, like, for example, I guess you're working hard in your day job or your business that, we have extra cash to buy stocks, right? I think you should not wait for the condition to get better. Why? Because when conditions get better, stocks are very high already.
Yeah.
Right? What I want to see is that, condition gets the worst possible condition. I mean, right? Because that creates the lowest stock price. That's when you want to buy, when there's everyone's really so bearish already, everything's so uncertain, that's usually the best time to buy, actually. Because as I mentioned a while ago, I think that the Fed knows that something could explode with what they're doing, right? That if they raise rates very aggressively, something can explode, whether the economy, the stock market. I think they know this, right? So that's why I think that they will, at the end of the day, I think they're going to prevent it from happening. To say that, okay, I give up whatever inflation, it's okay. I think they're going to give up in trying to get inflation back down to 2%, right? Maybe they're going to say, okay, 3, 4, 5%, it's okay, right? Stop raising rates, right? So I think at the end of the day, that's what's going to happen, right? But of course, I don't know when that day is, right? So that's why I think the worst possible point, I mean, when everyone's so bearish already, that's when you buy. Don't wait for things to improve. Energy crisis. Yes. I think the energy crisis, I think it's not just the war. actually is that over the past 10 years, because of the clean energy push, there has been no investment in capacity for fossil fuels, right? And now, I think there's no way that clean energy is still a very small piece of the pie, actually around 10% of global energy mix, right? No way it can meet the demand, which is still growing actually every single year. And that's why I think that energy prices can still stay high for the next few years. So yeah, I think that's, coal stocks, if you're open to trading these guys, I think still a lot of opportunity. Stock, the best investment choice. I don't want to put a choice, because I think that if you're an investor, you should always maintain a diversified portfolio, right? So yeah, actually, like for example, if you buy Indonesian bonds, I think they're actually a very attractive price already, right? 7.3% interest rate. That's not bad at all, right? So you should always maintain diversified portfolio. If the market has, from Johannes, if the market's very uncertain, does it make sense to enter? It makes perfect sense, as I mentioned a while ago, especially from an investment standpoint, right? Because without uncertainty, stocks will never get cheap, right? But maybe like if you're looking at from a trading standpoint, like trading buy sell, I'm 100% cash in my Indonesian account, right? Nothing, just waiting right now, nothing to do right now. Florencia, okay. With the energy crisis, is it wise to look into renewable energy? I think actually, like, how do you produce renewable energy, right? How do you produce the solar energy, right? You need to produce the solar panel, right? How do you produce solar panel? Right? You need a lot of electricity, right? Where does electricity come from? Fossil fuel, right? That's why I think that it's also going to get very expensive to deploy renewable energy today. And I haven't done the math, but I'm pretty sure that if the costs go up, it will affect the, the payback period, the profitability of any renewable projects, right? So that's why I think while we have an energy crunch globally, the play is really the oil, coal, natural gas. Food crisis. Well, I think there's still a food crisis, but at least recently there's having a pullback already in wheat and CPO price, right? So that's why I think a month ago, right? I think we included Indo Foods already. And yeah, I don't think the food crisis is over, but I think for the next few months, maybe 6 months, this year, we could see a big pullback in wheat CPO price, right? And Indo Foods has been passing on the price increase to consumers successfully. So I think, it's a good company. It can pass on the price increase, even though if, for example, wheat goes up again. So yeah, I think, of course, you just have to buy at a good price, right? But I think, certainly these companies can survive what's happening today. From Prast, okay, I guess that's a nice bike. Good for health investment. Thank you. So I guess, yeah, for sure. I don't just invest in my portfolio, but of course, you also have to invest in your health. So that's what I told my wife. It's an investment. Okay, so from Inigo, I guess second question first. I think this is a nice question. Biden recently said that he would negotiate tariffs with China to make goods cheaper in America and lower inflation. That will, of course, definitely have an impact, right? So maybe the US, the government, they finally figure out that, when Trump put tariffs on China, they're only hurting themselves, right? uh yeah, I think that would be very helpful, right? Actually, like if you look at, like when you go to the when you want to put gas on your car, right? You actually don't put crude oil, right? You put gas or diesel, which is actually are refined already. Refined. Actually, China has actually a lot of refining capacity. Okay, that if they really, if the trade war is over between US and China and suddenly they're friends again, then maybe China could export refined oil, gas or diesel to the US, and that could help lower inflation actually. And actually, that's quite bullish. That's bullish, of course, because that means that maybe the Fed won't have to hike rates aggressively anymore, right? Okay. So I guess, it's not all very bearish, right? What if this, uh, suddenly something happens between US, China, negotiate tariffs, or what if suddenly, although I think this is unlikely, what if suddenly the war goes away, right? Okay, or what if suddenly, like even if inflation is very high, the Fed, just gives up, like say that, okay, I don't want to hike rates anymore. Okay, so that's why I think that we should take advantage of any more uncertainty if stock prices go down some more, right? Because as I mentioned, at the end of the day, I don't think the Fed wants the market to explode, right? Uh, okay, so this is a nice question also from Inigo. Okay, stocks whose business is basic needs like commodities, food, gold, oil will perform better compared to manufacturing. So I think that's, in an environment where commodity prices are going up and very fast, then of course it can be very hard for a manufacturing company, right? So I think that, if oil, gold, metals continue to go up very aggressively, then of course it will be hard for manufacturing companies, right? But if it goes up or just goes up in a very controlled manner, not too fast, or goes down, then that's okay. Santi, what do you think of the outlook at the end of the year? Okay, I think it's anybody's guess. Okay, so as I showed a while ago, I think we have so many sources of uncertainty that really, I think 78 is possible, but I also think it's possible to go to 6,000. Okay, I think a lot of uncertainties out there. Okay, so A says, yes, so maybe this is just I just made the update recently, so maybe the recommendation hasn't adjusted yet. So okay, so from Zoom Education, the commodity stocks are bullish today. Do you think that it will happen temporarily or it will be continuously? Uh, I think commodity prices are, I think right now in the bull market, right? Although they've been pulling back recently. But as I mentioned, I still like the energy stocks. That's one thing I'm still bullish about. ITMG bounced up today. Yes, I see it. Yes, nice volume, but I think overall the coal stocks are still undergoing some correction. So from Woods, okay. Big debts, yes. Big debt, but not too alarming. I think interest rate around 9 to 11% is actually the typical interest rate for corporate borrower in Indonesia. Okay, of course, unless you're a gigantic company like, for example, Astra. But I think the typical company in Indonesia has an interest rate of 9 to 11%. I think they'd be okay, maybe cash flow. I think that's just the cash flow, negative cash flow recently. I think it's just temporary. Yeah, I think wood is going to be okay, right? Especially like they actually vertically integrated, right? They own a lot of forestry assets, so meaning they're not affected by the high input costs that much. Okay, but as I mentioned, I think that I think the U.S. housing market is slowing down, so that's why I want to wait for that situation to clear out first before we start buying wood again. And I think another point related to that is that I think so many stocks are cheap that, we can prioritize buying them first. Rani, see you on Strava. Okay, follow me and I'll follow you also. Melanie, there's one question here, but it's in Bahasa. Maybe you can translate.
Yes. What do you think about PWON, PWON, and ASA? Can we buy now or wait until reversal?
Actually, I think the property stocks are, I think, all very cheap actually. I think it's similar to the Philippines. Perhaps, people are concerned about, I guess, the rising input costs, rising interest rate, which of course can affect the property sector. But if you ask me, I think they're extremely cheap actually.
Jadi Pak John, untuk PWON dan ASA-nya boleh dibeli saat ini karena harga saat ini sudah sangat murah.
I think, yeah, as I mentioned, what we're really waiting for right now is really the market. I don't think it's that cheap still, and a lot of uncertainty. So we want to wait for the market actually. I think that in this environment, we could see a lot of bargains, and that's why I think there's no rush to be very aggressive in buying.
Belinya boleh dicicil, Pak, karena situasinya masih belum stabil, jadi boleh dibeli, dicicil aja.
From Melanie with double N and an E. If deep recession plus inflation continue to up, better keep cash and buy cheap stock. Okay. I think this deep recession and inflation continue to go up is really, I think, the worst case scenario for the US market. Okay, but Indonesia actually not so much. To measure it's just that, of course, if something happens to the US, there could be contagion, right? Yeah, I think that's the worst case, and yeah, I think it's still possible. Okay, I guess exciting times. AALI, so I guess this is not part of our investment list, right? Actually, I can't answer right now. I can't answer specifically, but I think that I don't think the food crisis is over. So CPO prices have been pulling back, but I think that it should average much higher than the past 10 years. Okay, you get what I mean? So if that is true, then Ali should be okay. Although it's having a big pullback recently. For trading, yes, we're still waiting now, right? The market has just gone below the 200-day moving average, right? I think not much any setups at all, actually. Natalia. So exactly, that's exactly what's happening today, right? It's great. So I think if you look back on last year, right, in the fourth quarter of 2021, around October, when inflation kept on accelerating, right, when everybody thought actually it would already go down, that's when stocks started to go down in the US actually, right? And of course, if inflation is going to go much higher, right, of course, that will affect the valuation of stocks, right? I mean, just think about it. Like, for example, if you were to invest in a business, for example, right? If there's no inflation, then maybe 12% return is okay, right? But if there's like, for example, 8% inflation, then suddenly I will have to make a lot more money to justify this investment, right? Or I wouldn't pay I would pay a lower price for this business, right? And of course, valuation is inflation is a big factor in the price of stocks and bonds. And yeah, that's exactly what's happening today, where the price of bonds, the price of stocks, the price of everything is adjusting for a world where we have high inflation. From Santi, I'm not sure I understand this. Foreign funds keep leaving by winter, the war is still going. Yes, actually. Okay, so I think if you look at what's happening in Europe right now, right? I think they are scrambling to secure enough natural gas for the coming winter, right? And that's, I think, there's still a big shortage of natural gas, and that will keep the price of oil, coal actually up there. And yeah, I think I think the energy sector is still going to be present some nice trading opportunities. Some stocks went up so much within the past 2 years, but I don't think it's the play is over. Okay, are we okay? I think we're okay. I hope I didn't bore you guys with too much economics. Just watch the video.
Yeah.
Okay, maybe we can have this last question. Coal. I think at this price, like if you look at Newcastle coal, it's around almost $400, right?
Wow.
That's extremely high.
Mm-hmm.
As if you look at the cost of these coal companies in production, I think they're like a lot lower than that. Right, so they're making a lot of money. Like even if the coal price just goes sideways from this point, I think they're going to make a lot of money. Nickel price. I don't know when. Okay, I think nickel, all the coal, nickel, copper, tin, aluminum, steel is all going down right now, right? Because I think people are scared of recession, a slowdown, right? So I don't know when that's gonna end, but as I mentioned, it depends on the Fed, and it depends on inflation. But yeah, that's gonna be. Don't worry, I'm gonna pay very close attention as always, right?
Mm-hmm.
I think we have to keep our ears close to the ground to figure out this timing aspect. It's very hard to know in advance, right? I don't know. The timing is very hard. You have to watch the market closely to if it gives a signal. Shipments, logistics sector. Actually, I've been looking at the space. I think there's a play in this space, right? Because as I mentioned, because of the war, because of deglobalization, suddenly, for example, people can't buy anymore from Russia, right? Especially energy. So where are they buying, right? It's Indonesia, right? So I think maybe the shipments of commodities from Indonesia to everywhere, I think is picking up, right? So that's why the shipping stocks in Indonesia are going up also. So I guess at the end of the day, it's a play on commodities as well. Antam, Inco. Well, I like the Indonesian nickel stocks actually. I like nickel because, as we all know, I think the EV, right? The EV industry, like the vehicles, is growing very fast, right? Especially China. And in fact, right, the Elon Musk, the government are in talks right now, right, to build an EV supply chain in Indonesia. And of course, that's going to be good for the nickel stocks long term, right? Okay, I think that's okay. So thank you guys. I hope you saw it as an opportunity, what's happening today. Not something scary, but because I think it's a gigantic opportunity.
Yeah. Okay. Thank you, Jason, for the explain. Terima kasih teman-teman buat semuanya yang telah join. Dan satu kuncinya untuk kita berinvestasi, kita tetap sabar menunggu saat untuk kita menggunakan 30% yang sudah Jason minta untuk keep, untuk sediakan sejak 2 bulan yang lalu. Jadi nanti akan ada saatnya kita menggunakan 30% dari portofolio kita ini. Oke, thank you Jason. Good night.
Okay, good night.